Hey, good afternoon, guys. We're gonna begin shortly. I'm just waiting for more people to stream in. Let's wait another 2 more minutes before we begin. Meanwhile, today's webinar is on pivot points. So as we go along, if you have any questions, I'll be happy to answer them. Either put your questions in the chat or the Q&A section. I'll share the question with the rest of the people on the webinar, and then we can go through them as we go along. Yeah. Okay, I think we can begin. Yeah, I see some familiar names on the webinar today. So today's webinar will be on market structures. This is actually the part 2 version of market structures. We had the first session last week on market structures, but that's something more generic, looking at high highs and high lows for a bullish trend, and then a lower high, lower lows for a bearish trends. Today, we're going to look at pivot points. I think some of you might be familiar with pivot points, but I'm just going to go through basically the rough overview, and then from a standpoint of an EA on algorithmic trading, how we use pivot points to determine entries, stop loss, as well as our TPs. Okay, once again, my name is Sherman, and I'm the R&D lead from Zeta Labs. This webinar is brought to you by Vantage, and we are actually collaborating with them to bring to you this set of webinars. Okay, so before we begin, right, I just want to let everyone know that trading at any forms of derivatives is a high risk activity. So do ensure that whatever that we cover in this webinar is sort of in line with your own trading objectives. If you do need your own independent advice, please do seek them out, right, and fully understand the risk before making any trading decisions. Okay, if you guys can't hear me well, or you can, if I'm going too fast, just put it in a chat and I'll just adjust accordingly. Okay. So a rough overview of today's webinar. So we're just going to go through the pivots points, what they really mean, how do we actually calculate them. I'm not going to dive too deep into how we're going to calculate them, but rather in a layman terms, what each of this level mean, how we can actually determine the support and resistance using these pivot points, and then look at the confluence of these pivot points. And I'm going to go through some chart examples, live chart examples for some of the common pairs, common currency, euro, dollar, gold, and maybe the S&P 500. Okay. So the market structures pivots, when you look at the data points that are given to us at any given time frame. So for example, on a daily time frame, on a weekly time frame, and on a monthly time frame, right? We have 4 data points, which is basically the open, high, low, and close. And these 4 points themselves, they actually give us a lot of information on where the market is moving really. Okay, so the pivot points is basically an extrapolation of these 4 points, right? But we're going to remove the open data point and just use the high, low, and close just to determine the sentiment of the market within that period in time. Okay, so we're just going to use 3 points, the high, low, and close of that period. Okay, the pivot point as compared to other indicators is considered a leading indicator of where the market is going. So if you actually compare the movements of these pivot points, you can actually predict or extrapolate your chart to determine where price will end up in the next period. Okay. Based on my own experience, it's more effective on the high time frames. So the monthly, weekly, and daily, the 3 time frames that I usually use. And as you move down lower to the 4 hours, 1 hour, there might be a lot of noise, and the pivot points might not be as effective. But you can still use them if you're going to scalp intraday. And to a certain extent, they might still work, but it's better to be used on high time frames. Okay. So the pivot points are actually predefined levels. So at the end of every period, at the end of every day, end of every week, these levels will be basically calculated for the next coming week, for the next coming day, or for the next coming 4 hours. And so you will know where prices would be, to expect where prices would be based on these pivot points. Okay, and then based on historical data, right, you can actually calculate this on your own, or you can use sort of like a generic market sentiment. A lot of the companies out there, they do provide the probability of price going above each of these lines. So when a set of resistance lines are calculated and formed, right, as you go to higher levels, the probability of the price reaching to those levels actually decreases. So that's something to take note of. And when you're actually trading at prices above each resistance line or below each support line, you can actually use all of this probability to your advantage to know when market is going to reverse or when price is going to reverse. Okay. So I'm just going to talk about the calculation of these points. Basically, based on your previous high, low, and close points, you'll be extrapolating this into 7 additional points. Okay. The first point that we're looking at is the pivot point. Pivot point is basically the average, right? So we're using the high, low, and close, and basically you're looking at the average of these 3 points on your previous period to determine this pivot point. So in most cases, or most of you might be familiar with, is that the pivot point, if prices are above the pivot point, it means that prices are more likely to move further above the pivot point. And then when it's below the pivot point, prices are more likely to go lower. And essentially, if you look at the calculation for it, every resistance point, right, how we're going to label this is based on this example here. The orange line is the pivot point, right? And what we're going to do is we're going to calculate the resistance lines that's above the pivot point and the support lines that will be below the pivot point, okay? And basically all of this are basically using the previous high, low, and close. So you look at resistance 1, right? You're using basically 2 times the average of the previous day's high, low, and close minus the low. And then the support is basically 2 times pivot point minus the high. And what this means is that as prices goes lower, right, you're drawing support lines closer to the pivot point, and as prices move higher, you're drawing resistance line closer to the pivot points. And what you will actually identify is that as we draw these lines, even though it is just solely for this particular period, so if you're looking at daily, and this is solely for the particular period, you'll notice that your R1, your R2 will coincide with previous resistance level, right? And your support S1, S2 will actually coincide with previous support levels. So you can actually ignore any price actions that has already been passed and just look at these calculated levels and determine where the resistance points will be. Okay, and all of this is just solely and purely from the 3 points of the previous period. Okay, so again, the pivot point in the middle, we have 3 resistance points. I'm just going to show R1, R2. And again, when I talk about the probability of prices going above R1, on average, it's about 40%. R2 is about 17%. And the R3, which is basically an extrapolation of your R2 and your pivot point, would be 3%. So if prices were to ever pass the R3 on a particular day or pass below S3 on a particular day, you know there's a 3% chance that you go lower, which means you have a 97% chance of a reversal. So, I mean, based on your look back period, you can use these probabilities to your advantage again. When there is a drastic event that causes price to move above R3 and below S3, you can safely say that price is going to reverse. And I'm gonna walk you through what would be the target price for those reversals and how you can actually trade those points. Okay, so far, there are two questions. So the first question is there a way to calculate pivots automatically? Yes, there is. So if you're on TradingView, if you're on MT4, there are indicators, tools for you to actually predict the next period's pivot point. So you don't have to do that manually. If you go to TradingView, you can just type in pivot points and they'll draw, basically these indicators will draw for you the levels automatically. And the second question is, how much pivot point numbers of past historical ideally can I use? Is 2 enough? Does this help provide a better analysis? So the good thing about pivot point is that you just need one previous period to compare. There might be certain analysis that requires more pivot points. And I'll walk through the examples later, but I can actually show you guys how you can just use the previous day's pivot points and the current day's pivot points to sort of predict where price is going to be or how to trade those levels. Okay. So this is an example using pivot points, the analysis. Okay, so the first one is basically identifying the current trend. Okay, so with any indicators, you definitely need to identify the current trend. You can either identify that using your indicators, or you can just eyeball the trend. It can be a secondary trend, it can be a primary trend, but most importantly, on the higher time frame, what is the prevailing trend and how you can actually trade it. So in this example, if you were to identify this as a downward trend, right? The key thing to note is that in between each R1 level and R2 level, you can actually specify a midpoint. Okay, some people use this midpoint to indicate sort of the level in which the continuation of that prevailing trend will be like. So what do I mean by that? So if you actually look at this example here, this pivot point on this day was created by the high, low, and close of the previous day. This pivot points here was created by the price action on this day, and then this, so on and so forth, right? And if you're looking at a downtrend, the midpoint between the R1 and the pivot point, which is basically this middle point, we can call it M3, which is basically middle tree, right? If you were to connect all of this middle tree, you'll realize that this forms a ideal downtrend, meaning that if prices were to move down to this particular level to create this low, the next best entry would be the M3 on the next day. Okay, so if let's say price were to move down here and you already missed this entry, the next best price to enter on the next period, which is the next day or the next week or the next month, is M3 for the continuation of the downtrend. So if price moved down here, you miss this entry, right? The next best entry would be M3. So M3 is basically the middle point above the pivot point. Okay, and as price goes down, the next best entry is M3 again. Okay, and of course you can incorporate a lot of the other indicators or the market structure examples previously into your analysis here. So here we can see that as price moved above this level, right? This was the last candle that caused this move up. There's this break of structure. The next best entry would be this order block here, right? And then basically if you look at the next period's M3, that's where the ideal entry would be like to enter again. And similarly for a bullish trend, the middle point, we can call it M2, which is below your pivot point, will be the best entry point to enter for an uptrend. So again, because this is the downtrend, it's easier to see that every M3 entry will create this nice downtrend for you. And based on the calculation, if I were to go back to the calculation earlier, right, you realize that it's always 2 times of pivot point minus the low, 2 times of pivot point minus the high, and then this pivot point minus support, which is basically your pivot point plus the difference between your high and low, and your support 2 is your pivot point minus your previous high and low. So you can see that there is this 1:2 ratio that's occurring when we calculate the R1 and R2. So what it actually means is that whenever it goes down, this, in the Fibonacci terms, later I'll show you as well in an example, the M3 will be your golden zone for your Fibonacci retracement. because it's a 61.8, which is 1:2 ratio, right? So as it goes down, this M3 is basically the 61.8 retracement. And as it goes down to this low, this M3 is the 61.8 retracement. So again, you see a lot of overlaps between pivot points and the Fibonacci retracements. But the key thing here is that pivot points is siloed based on a period basis, whereas your Fibonacci, you're free to sort of draw from the high to low without constraints of the time frame. Okay, so in a sense, it's actually easier for beginners to actually use the pivot points because every day's pivot point or every 4 hours pivot points are already calculated for you, so you can sort of know where is your potential entry for your downtrend or uptrend. Okay, again, the level above the pivot point, which is M3, it's your ideal entry for a downtrend. And then the M2, which is the line, the middle line between your pivot and your S1, is the ideal entry for the uptrend. Okay. Okay, so in a downtrend, right, when you look at this particular period's downtrend, right, your ideal case for a down entry would be your M3, right? And the projection. So when you actually enter into an M3 position, right, your projection of this movement would be the line between S1 and S2, and we can call it M1. Again, below this is M0, M1, M2, M3. Okay, we can call this M1. So the expectation, if you enter on an M3, the expectation is that price will move down to hit M1. Okay, and in this move, when it actually rejects your M3, we can consider this as a bearish move. And again, can't really see it here, but this is an M2 move. So once it rejects the M2, right, the potential move or your TP target would be this level here, which is M4, because this is M3, R1, M4. Okay, so price may or may not go above it, but this is basically the point in which you are actually 2x of where you actually ended. So again, like I said, Fibonacci retracements and extension coincides with your pivot points. There are pivot points that are being calculated using Fibonacci numbers as well. But this is basically the standard pivot points using your previous high, low, and close. Okay, so an M2 entry will predict the M4 exit. Okay, and again, these are your standard market structures forming this will be your higher high and higher low, lower high and lower low, and this will be your higher low and higher high. Okay, so in certain cases, not every case, not every day, not every week, you'll see something so nicely rejecting the M3 and moving down to the M1 and M2 to M4 levels, right? There are certain cases where it might be events driven, it might be market sentiments, where at the M3 level, right, instead of rejecting this level, right, instead of moving down, it breaks past M3, right? And once it breaks past M3, this is what we consider an out of position M3, which is basically instead of it selling down, it actually moves up here. Okay. This usually leads to the M4 target as well, or in fact, in most cases, it will actually lead to a break above the R2 to form a very bullish movement. Okay. Again, this may or may not retest M3. This is a very nice retest of M3, but usually when market sentiments are bullish, right, prices will not retest this level and instead move above your R2. Okay, this is a bullish level. There's a question on what are M1 and M2. Okay, so we just use pivot. Just to go back to this point where M1 and M2 might be a bit confusing, but okay. The pivot point is the middle point. Above the pivot point is M3, and below the pivot point is M2. Okay, M1 is basically the next middle point between S1 and S2, and S4 is the middle point between R1 and R2. Again, it's not highlighted here, but you can start off M1 as the middle point between S1 and S2, and M4 is the middle point between R2 and R1. Okay. You don't really need to worry too much about the middle points, right? Just note that these are just 50% of the distance between pivots and R1, and most pivot points on TradingView or MT4, they will actually draw for you these middle points. So you don't really need to worry too much about the labeling. Just note that these are the key points in which we are looking at, and what are the target points for the entries here. Okay, so this is the out of position bullish move, and this would be the out of position bearish move. So what happens here is that instead of a move above the pivot to achieve our M4 here, this point here, instead it move in an out of position manner and breaks below M2 with the target at this middle point, which is M1. And this is a bearish move. And again, in an out of position manner, out of position means that prices did not even attempt to cross the pivot point. Okay, so pivot point is the resistance here. And as it moves down, right, the expectation is to take profit here. But in most cases, out of position trades will actually move below your S2. I also will touch on how we can actually trade this pattern. Usually you want to trade the reversal pattern with the target TP as the next M3. Okay. Yeah, so M3 and M4, M3 is above the pivot point, the middle point between pivot and R1. And M4 is the middle line between R1 and R2. Okay, again, why are we not talking about R3? Why are we not talking about S3? Because the probability of prices reaching those levels are less than 3%, right? So if you ever reach an R3 or an S3 pivot points, you can actually calculate the S3 and R3. And if pivot points were to ever reach those levels, basically there's a reversal, there's a impending reversal. Okay, so if prices were to hit an S3, you can start buying at the S3 level because it's wildly oversold for that particular day. Okay. So two things using pivot points, we will need to determine the two key things. One is the trend, and the second one is reversals. So let's start with the trend. Okay, so just by looking at the pivot point of each individual period, this is the daily pivot point, right? As the pivot point moves lower, we can sort of say identify this as a downtrend, and as the pivot point form a higher high, basically it's a bullish trend. And like I said, you just need the pivot points on the previous day, which means that if I were to look at this two period, right, maybe just this period and this period, I can identify that as a downtrend. Same thing, I do not need this for these two pivot points. I can identify this as a downtrend. It's a downtrend, it's a downtrend, it's a downtrend, it's a downtrend. Okay. Again, the central pivot is the high, low, and close, the average of the high, low, and close. So that is actually a way to smoothen out any extremes, right? Any anomalies that are happening. And you're just looking at what is the normal price range for this particular instrument at this particular time frame. Okay. So again, when you see pivot points forming side by side with just a higher with an increase, right? You would sort of look at this as a range. Again, these 2 days as a range, and then this day as a downtrend. Okay. Okay. The next thing about reversals, like what I've mentioned, any prices above R2, prices below S2, that's usually a range between 17. It's around the probability of prices reaching those levels are around 17%. Right, so there's 1/5 of a chance that prices will go above R2 and S3. And if you combine that with your market structure, the understanding of the market structure, right? If you look above R2, right, anything that breaks above R2, that would mean that in a downtrend, your R2 usually determine a price level that's higher than the previous high, right? So in a downtrend, you look at this R2. This R2 is higher than sort of your previous high. This R2 is sort of higher than the previous high, and this R2 is sort of higher than the previous high. And what this means is that you are no longer forming a low high, lower low formation, and instead this would be a formation of a higher high. Okay, so if you're so confused with market structures, you don't want to identify what's the higher high, what's the higher low, or what's the low high, lower low. You can use pivot points to determine that once prices closes above R2, it's a bullish reversal, and once prices closes below S2, that is a bearish reversal. This would actually mean that buyers have already crossed any of your previous high and forming a higher high now, right? So the next step would be to find your higher low and then move in that reversal pattern. Okay. So in an uptrend going above R2, again, this is bound for reversal. You can look at some examples later, right? But anything above R3, you can, if I were to put R3 here, it's somewhere around here. Anything above R3, a reversal is going to happen. A retracement is going to happen, not a reversal is going to happen. Okay. So M4 to R2, anything above this zone, it's considered a reversal. Okay. Hope that is pretty straightforward, right? So just summarize before we go into some chart examples. Pivot point, that's the key thing. Determine a trend in which your pivot points are basically showing you. So in this is basically a downtrend, downtrend, downtrend. Above, there'll be two levels, R1, R2, S1, S2, and in between there'll be the middle lines, okay? If we want to continue the downtrend, the best entry is the M3 level, and in an uptrend, it's the M2 level. So again, we can use this example, right? So on this day itself, it's a downtrend. My best entry would be somewhere around here. So if you draw a diagonal trend line, you'll notice that it coincides with your M3, right? But prices did not hit this level, so you would have already missed the sell here on this day. So as prices go down, at the end of this day, you already have the pivot levels for the next day. So the best entry for this downtrend, because the pivot point is on this day is lower than the previous days, your M3 will be your best entry point again. Again, so this you might have entered here, right? And the target price is here. So you have identified this move here. Okay, so as it goes down, comes back up, if you look at this point here and the previous high, right? This M3 will be your ideal entry again. But again, this was not entered, so you only have one entry here, and price moved down towards here, right? So you have TP this level, and then as prices move down, you want the price to move back up to this level again. And again, this is because of this high here, your trend line will have become steeper, and your entry will be on the M3. Again, you would have entered here, and your previous high is here. So now it forms an even steeper line, right? And the new entry, M3, will be here, and then your target will be your S1. So as you enter here down to this level, right? This would be your ideal entry, but again, because of this reversal, you have been stopped out. So if you were to trade using the pivot points, you will have made maybe multiple entries in a very good downtrend. And then the last one that determines that got stopped out will be the one that is the reversal. Then again, because of this indication of a reversal, the best entry will be here. And then goes up, your best entry is here again. Then because this didn't break above the previous high, this might not be an entry for you. But again, if you were to enter this M3 because of the higher low, then this would be the move. Okay, so I think we're left with about 3 more minutes. I just want to go through some chart examples so that we can look at some live examples. You guys have any currencies that you want me to go through? But I can go through maybe the key ones, I think gold would be something that we can look at. Okay, so again, usually, okay, so let's take a look at, let's remove all of the drawings. Okay, so let's use a 1 hour time frame again. Okay, so again on, let me see, let's use Vantage data. Okay, so under indicators, you go to pivot points. You can use the pivot point standard. Most of them are very similar to one another. It's going to be a few pips difference, but the analysis will still be the same. Okay, the one that I'm using, it's a this particular pivot point, which is the Wayne's pivot. You can use that with the highlights of the particular areas. Okay, so depending on how what time frame you're looking at, are you trading intraday, are you trading intra-week, or are you scalping? You need to adjust the pivots accordingly. Okay, so if you're trading intraday, then using the daily pivot would make sense. But if you're scalping every hour, I can show you how you can scalp every hour as well. But let's look at this this range here. So as you can see, as the price moves down towards this area, you can look at the pivot points, and the pivot points are all indicating a sort of like a downtrend. And of course, within these 2 days, it's basically a range. Okay, and ideally, as we go downtrend, you can see that the entries for each day, right? Again, the pivot points, timing is very important for pivot points. So if you use a Fibonacci retracement tool, right, you can disregard the time frame that you're looking at, right? You can disregard the time element. But on pivot points, the time frame is important, and it's important to align your pivot points to the trading sessions, right? So what we usually do is the pivot points will be aligned to the end of the New York session and the start of the Asian session. Okay. Why are we doing this? Is because during the Asian session, it's usually less volatile, or there are lesser activity during the Asian session as compared to the London and New York session. So basically, the first 8 hours of the day would sort of determine where the price would go. Okay. So of course, this is not a perfect downtrend, because the lower low, you don't really see a nice pattern where it's 1:2 ratio. So in this case, if you were to look at these points here, so on this day, say Friday, 14th of October, right? The M3 of this point here, if you were to connect the 2 levels here, you have realized that at the M3 level, this would be your best entry to enter. Okay, so on this day, just looking at this downtrend here, right? This would have been the best entry to enter. Okay, but as it breaks out of this level here, the idea is that as it breaks out, what are you trying to look at? Are you trying to look for a reversal, or are you trying to look for the prevailing trend? Okay, so the prevailing trend suggests that on this day, the M3 will predict our M2 movement. Okay, but as it breaks out and comes back down here, the goal for a reversal will be to break above R2. Okay, but as it continues to move downwards, you can sort of say that these 2 days, this would be our range to trade at. And again, once it comes back to M3, this forms a new downtrend from our previous high to our M3. And so the next best entry here will be M3 down to M1. Okay. And so today, now that we are at this current day already, right? So if you were to look at the downtrend, right, from here to M3, right, this would be our best entry to enter and to reach this target of M1. Okay, so ideally, right, you want to identify the overall trend that's happening, right? And again, if you are into the smart money concepts, you're looking for order blocks, you will realize that they're actually confluence of levels. So say, for example, M3 is our pivot points entry. There was this red candle that formed yesterday, and there was this green candle. So this green candle can be our order block, and it coincides with M3, right? So what would be the expected move? Expected move would be that this M3 might hold with this order block, and price will touch this level before heading back down. Okay. And again, if it were to reach, because it broke M2, right? We are no longer looking for this move up, right? We are looking for some sort of level resistance where we can actually go back to hit this level and move down. And again, we have this resistance here, right? This level here, which we have tapped into. But of course, this is just a pivot point. And looking at how aggressive the sellers are, this might be a potential entry or this level. Okay, so this bullish move is out of the question for today, right? The entry that we are looking at will be either selling off at pivot or selling at M3, depending on which order block you are comfortable with. Okay, we can look at something else like, okay, I'm gonna look at euro dollar for now, because this is something that is of interest to me. Okay, so again, M2, right? This was the M2 move. The target was here, but it broke past the target. Okay, and okay, just now I wanted to highlight something, which is basically, oh, there are a few questions. Okay, the first question, let's go through some of the questions first before I come back to this analysis on euro dollar. Can pivot R1 and S1 level be used only, or do I need to use all three levels R1? Oh, you don't really need to restrict yourself to any of these levels. The key levels to note would be the three middle levels. So the M2, pivot, and M2, pivot, and M3. These are the three levels for you to enter in that particular time frame. Okay. What R1 and R2 serves at is basically a TD point. So if you are used to entering two positions at 0.5% risk per entry, then you might choose to take one at R1 and the other one at R2. So usually when you look at some traders, they usually put in three TPs, TP1, TP2, TP3. You can actually use R1, R2, R3 for your buys, and S1, S2, S3 for the sells. Again, if I go to the settings, I can, oh, it's up to R2. Okay, so you're not restricted to using R1, R2. These are levels that are for you to actually take your profit. Okay. Yes, another thing that I wanted to highlight. So if I were to look at a range, okay. So let's say this is a range. And if you look at something like, okay, let's imagine this is a range. Okay, this is a well-defined range. There's an outcast here, but if let's say you were to trade within this range here, okay, you'll notice that your M3, right, your M3 and R1 will be the top of the range, and S1 and M2 will be the bottom of the range. So combining both concepts together in a trend, you're going to buy at M2 and sell at M3. But in a range, these levels will sort of coincide with the top of the range and the bottom of the range. So the strategy actually works for both a range as well as a trend. Okay, so if your strategy, if you perfect this strategy for trends, in a range, you'll basically make money as well, because the M3 and R1 always coincide with the top of the range. S1, M2 always coincide with the bottom of the range. So if you buy at these levels, right, it's basically just when you go TP. You just TP at the top of the range once you have identified that it's basically a range, but you'll still buy at these levels and sell at these levels. Okay. Yeah, so I would look into NASDAQ 100. The thing about pivot points on equities, and I've not actually looked into that yet, but I think they should actually do the same. As in they should actually predict the same levels. Okay. Another thing about this point that we're actually looking at is that if you look at this downtrend, you have TP here. One thing that I just wanted to mention earlier on is that what happens if price moves below this level, right? So in an uptrend, breaking below your S2, right, would be considered a reversal. So your pivot point is here, here, and here. So this is an uptrend. So breaking below would consider this as a reversal. Okay, same thing here was a downtrend. You just look at these two pivot points. Breaking above this level will mean that it's going to be an uptrend. Okay, but what happens when you are in a downtrend and it breaks below S2? Okay, so let me find in a downtrend and a break below S2. Okay, I can actually look at this. Okay, so in this example here, this uptrend here, in an uptrend and it breaks above R2, right? This is a very bullish move, right? Breaks above R2. Your entry is supposed to be here. Your TP is supposed to be here, right? Whenever in an uptrend and it breaks above R2, right? The likelihood is that it will end up on the next day's M3. And this is where you will actually sell to your buy entry. Okay, so for the continuation of this uptrend, once it passed R2 on the last hour of the day, that means the closing of the New York session, right? Your target would be to buy here on the next day, buy here, right? And basically, you actually this is a high probability trade because R3 will be somewhere around here, and breaking above, it's a 97% chance of it coming down. Again, 97% chance is basically maybe like a 10-year look back period, and you have a 97% chance that once prices breaks above R3, the chances are that prices will revert back to the mean. Okay, so this is your next entry for the uptrend, right? And the sell on the last hour, if it happens to be on M3, that will be a sell. Okay, I'll give you another example. Okay, so another example is this. Okay, so this is a downtrend, right? The next day appears on M2. Okay, this is still a bearish trend. The idea is that you want to sort of buy up to M3 to continue the sell. Okay, but because of, and this is high risk because once you enter and you realize that prices is not moving up by the start of London session, right? You have been stopped already. Okay. So what would be the ideal case? The ideal case would be that if you are if you understand layering, so this would be your first entry, right? You have suffered this drawdown, right? On the last hour of the day, if it formed a new low, in this case, it didn't form a new low, okay? But on the last hour of the day, you have all these pivot points, and the entry will be M3 again. So these 2 points, on average, you can actually close out the position here for the move down. Okay, again, this level here, on the last hour of the day, you want to buy up to M3 and then sell. And so that's kind of the idea, okay? So in most cases, right, in a market which is moving or trending in a very strong direction, either up or down, right? There's a high risk move of counter trending, playing a counter trade at the last hour of the day into the M3, which is the previous, the next day's sell level, okay? But do not worry that if at this point in time there's a formation of the out of position trade, right? The last hour of the next day, you can sort of buy. And what is of high probability? The high probability is that the trade would end up on M3 the next day again. That means prices will return to this level to sell again. Okay, so this might happen a few days. So this might buy here and then maybe you buy again, price falls lower. But within, I would say within the week itself, right, there will be point in time where price will retrace back to M3 before continuing the trend down. Okay. Again, these are all highly oversold patterns. So the probability of retracement or a reversal, it's higher as you go down lower. Okay, so let's look at the last one, which is your NASDAQ. I can do NDX. Okay. And so if you use, okay, so the key thing about NASDAQ and instruments that do not have complete data points. So what do I mean by incomplete data points is that they have hours where they are not trading within the week itself. So it causes gaps in between, and you realize that these gaps may not appear at your M3 and M2 level. Okay, if you look at currencies, right? If you look at any currency, right, prices always start off at either between the pivot to M3 level or M2 to pivot level. Okay, whereas for NASDAQ and any instruments that has a closing time, you realize that prices will usually move out of those zones due to gap downs and gap up. Okay, so for NASDAQ, my suggestion would be that instead of looking at daily chart, you will need to look at either the weekly or monthly, right? Looking at high time frames. Okay, so again, you can draw. I can cherry pick the movements, right? M2 at the start of the week, right? Predicts your M4. Again, this is a pivot, so it either has to go to M3 or it has to go to M2. But before it breaks your pivot point, this is your buy zone, right? This is your buy levels. Okay. Before it breaks above a pivot, it went down further. So this week was bearish, to be said, right? The target was M1, right? But prices revert back to this again. Again, down here, it didn't start off on the Monday. It didn't start off within the M2 zone, but this level will predict the M4, which is somewhere around 11.721. And again, there's a gap here. So there are a whole lot of sell orders, buy orders that are stuck here. More so sell orders because your prices are already above here. So due to slippages or due to like impatient buyers, the buy orders might have already been filled. So at some point in time, we will need to come back to complete all of our sell orders. In what scenario do we not need to clear these sell orders is when buy price moves up super high and the sellers basically just gets removed from the market by sellers. Okay, but if you're ranging around this period, ideally, right, your buyers, if this is in a bullish trend, right, your buyers want to buy all of the sell orders here, so they want to push price down before bringing up to this level again. Again, this is a weekly time frame. We only have one more day, 1.5 more days to go. So the idea is that starting off M2 past the pivot would predict the M4 direction. Okay. So that's kind of the idea here. Okay, another question is, can you tell which of the two, M4 or R1, should we aim for? Okay, so let's use a euro dollar again. Okay, so again, as we go higher, the probability of prices reaching that level reduces. So in most cases, M4 would be my TP price, right? So if you were to enter M2, you will realize this is a 1:3 ratio already. Okay, so I can show you with a tool here. If you were to buy at this period, okay, M2, and your target is M4, right? Your risk to reward ratio is 1:4, right? Because in 1, 2, 3, 4, they are almost of equal size here. In certain cases, it might not be of equal size, but if you were to enter M2 and take a profit at M4, it's usually at least 1:3 risk reward ratio already. Okay, again here, this is the weekly weekly pivot points. This M3 here, the start of M3 here predicts this level, but prices moved up to M3, tapped into M3, did not even cross the pivot, and it continued its way up. So the target was the out of position M4. Okay, so now you can see that your next next week's pivots are already drawn already, and as long as prices moves along this range, your highs and your lows are the same for this entire week, and your closes within this period, you can sort of look at the next week's pivot and know that it's going to be a bullish move. Okay, so what would be, if let's say prices would, for the next 2 days, prices would range within this area, because this will affect the next week's pivot as well. Okay, we have already attacked this this level. The next best price would be our M2, which is basically forming the support here. Okay, so as long as price range along this level, M2 will be our next target to buy up. Okay, that's sort of like how you're going to use the M2 and target the M4. Okay, what's the bearish pattern here? So the bearish pattern here would be that whenever you target this this M4, the idea is that if price were to reject M4 within the R2 to M4 level, it has to revert back to the mean. And when it reverts back to the mean, it's 100% retracement. So you start off the week here, you moved up, and you close back here. This is usually a formation of I mean, you can say head and shoulders, and then the next, where M3 will be, because of the low closing at the pivot point, your M3 will have moved down lower, because it's the average of these 3 points, right? And now your closing and your opening and your low is basically the same. So your average will be somewhere at this level. Okay, your M3 will be at this level. So you can sort of predict that, you know, like this move here, if it were to move down to this pivot level, that it was going to form the right shoulder, and then price will move down again next week. And the target will be your M1. Okay, so that's kind of like the idea for pivot points. Are there any other questions for how we use these levels? Right, if hopefully that's something that is slightly different from what you know of pivot points, or if you didn't know of something like pivot points, hope this is something that's useful for you to for your trading in future. But again, like maybe just a little bit more, just value add a little bit more. Okay, so this, if you look at this point here, right? This M2 was supposed to predict this M4, right? And then earlier today, during the Asian session, right, we already broke below M2. So for it to be very bullish, this pivot point has to be broken. So it has to break above this pivot point retest, and then it moves up here. Okay, but otherwise, you can actually look at certain order blocks at this level, and you realize there's this so whenever there's a wick, bullish wick, that's a bearish order block, and if it's a red candle with a wick, that's a bullish order block. Okay, so it's kind of coincidental that it coincides with M3, right? And then there's this big order block here. You can zoom into the lower time frame. Okay, let's try and look at the 5 minutes. Okay, and the 5 minutes, this I wouldn't consider this an order block, because the downward move here is not as strong as for me to consider that as an order block, but it coincides with the pivot. So this might be an area for you to sell. The second area for you to sell will be M3, and then you will know that if you sell at these two levels, right, and prices break above it, you know that basically this would be a continuation of the uptrend to M4. Okay, So I'll consider this as higher probability, right? Because you know that if you're wrong at these two levels, then it's an upward trend. Okay. As compared to selling, say, here, or selling somewhere here, if it breaks above, it's still a downward trend and you have been stopped up. Okay. But at this pivot level and entry level, you know that if prices were to break above these two levels, and again, this is the higher probability trade because this is M3 and the order block here is stronger, right? What do I mean by stronger is that the buyers push price to this level, and then this big sell orders came in to push the price down even lower. So this is a strong case where I would consider selling, say, if it moves up to this area, forms an equal high, and then takes some liquidity before it moves down, then that would be the trading pattern. Okay, so that's kind of like the idea for euro dollar. Are there any other questions regarding pivot points? So again, all of these slides will be available at the vantagemarkets.com/webinars. Feel free to look into these slides and just look at how you can actually determine the trends, the reversals using your pivot points. And then if you have any other questions, feel free to drop me a direct message and I'll try and answer them. Okay. With that, I'll end today's session. Hope you guys got something out of it. And then I'll see you again next week with building a trading plan. Okay.